Hello and welcome to my channel, The Quality Investor. This has become one of my favorite earnings releases. Before the market opened today, Photronics, ticker PLAB, released their earnings. Photronics is a small cap semiconductor equipment provider, specifically photomasks for integrated circuits and flat panel displays. It is a very niche product in the vast ecosystem that makes up the semiconductor industry. The semiconductor industry is one in which I have many holdings, and I am quite bullish about its future. However, it is a very complex supply chain. Being the backbone of our modern economy, virtually all electronics out there requires some iteration of a semiconductor to work. Photronics' core product is the photomask. Very basically, a photomask is a glass plate with a pattern etched into it. It has opaque areas allowing light to shine through it in that defined pattern. They are used in photolithography to produce integrated circuits. Even more, Photronics is one of 4 companies in the entire world that manufacture photomasks for EUV photolithography, which is the most advanced semiconductor tech in the entire world. Now, Photronics' growth is not necessarily dependent on higher sales of integrated circuits or flat panel displays, and therefore photomask sales. It is actually more dependent on design activity. This means as the integrated circuit market becomes more competitive and advanced, this will require more advanced designs for photomasks. Therefore, my investment thesis in Photronics is as follows. Number 1. Photronics manufactures a niche product that is required in nearly every semiconductor application, therefore making it a bottleneck in the supply chain. Number 2, Photronics is one of 4 advanced manufacturers in this space, and crucially, the only American manufacturer. Number 3, they have an incredible balance sheet. They have over $520 million in cash. They could pay off all liabilities, not just debt, all liabilities, and still have $315 million in cash left over. And my 4th and final point of my investment thesis is, while they control 11% of the total addressable market for the advanced photomask technology, they are poised to earn even more market share as the market becomes more competitive and advanced. All right, let's get into the earnings. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, don't forget to share this video and hit that notification bell so you can know right away when I post more stock analysis content. Okay, so starting off with the performance today in the market, we can see it was pretty dismal. They fell down to $26.88, $4.34 drop, a 13.9% drop. You can see, however, in after hours trading, they are up a little bit, 3.4%. We'll see if they can rebound a bit tomorrow. Looking at their income statement summary, we can see that the revenue came in this quarter at $216.3 million, which is up 2% year over year, however, down sequentially by 5%. One thing to keep in mind with Photronics is that Q1, the January quarter, is historically their weakest quarter. And I got the feeling from the earnings call that their story is very similar to what we heard with Texas Instruments, microchip technology, just weak overall semiconductor demand. Looking at the gross margin, that was up 60 bips to 36.6. And like I said, we do want to look at it on a year over year basis more than a sequential basis, because you're trying to compare what they did last year in January quarter compared to now. Are they growing on a year over year basis? Operating margins are a little bit tighter year over year, 26.6% operating margin, which is only 10 bips higher year over year. And we did see a diluted earnings per share of 42 cents, which is up 19 cents from the prior year. This slide is their revenue by product line. And there's a couple of things I want to point out here. First off, look at the high end for the integrated circuits. Their high end was up 27% year over year. And for the flat panel display, their high end was up 11% year over year. Remember I said in my investment thesis that they're one of 4 manufacturers for this advanced manufacturing of the high-end photomasks? Well, that's what they are defining as 28 nanometers and smaller. And you see down here, the high-end increased on strong demand from Asia foundries, And basically, the CEO also said on the call that they're seeing their Asian customers migrate from the mainstream to the high end to kind of go along with their increased capabilities in the manufacturing process. I'm not sure if that's cannibalizing their mainstream sales, but the CEO did say that the softness was due to weak demand in Asia. He also said, and I thought this was an interesting thing to note, that China, they're one of the largest countries that buy from them. And the slow demand in Q1 was actually a result of the Chinese New Year. So a lot of decreased activity in China. I'd never heard something like that cited before, and I just thought that would be interesting to point out. Some other factors with the lower than expected growth in Q1 here is that they had much lower demand in the very first month of the quarter that they were expecting. And they did see that demand rebound by the end of Q1, so that's a positive. And he specifically said they're seeing recovery in memory demand, which was similar to what the applied materials folks were saying. However, the real growth story here is the flat panel display growth. You can see that 8% total increase. Their high end is actually the bulk of their sales there. So this might be a real growth driver going into the next decade for Photronics. And flat panel displays, it's more than just TVs. It's computer screens and it's mobile phones. You see mobile demand expected to remain strong. So there's a lot of growth areas for Photronics over the next few years. The CEO even said on the call that their high-end flat panel display masks, that is where their real competitive advantage lies. And here is a snapshot of their balance sheet and cash flow metrics. You can see that cash and short-term investments I was talking about earlier combined, that's $521 million, which they only have $23.4 million in debt. And the rest of their liabilities only make up like 180 something million, meaning they have enough cash to cover their entire liability section of the balance sheet. This is a very strong balance sheet. I'm very happy to see this strength only improved in this quarter. You did say that the CapEx, they're targeting CapEx growth for the integrated circuit capacity and facility expansion. The reason they're targeting the CapEx to the integrated circuit segment is that they're expecting the semiconductor industry to transition back into its growth phase in the second and third fiscal quarters this year. This will inevitably lead to a higher photomask demand. And one more thing I want to point out is they actually had negative free cash flow this quarter. They had operating cash flow of $41.5 million and CapEx was $43.3 million. So that's actually a negative $1.8 million in free cash flow. However, like I said before, that's consistent with their historical Q1s. And another note that this $43.3 million in CapEx this quarter, that's actually a pretty large bulk of their entire fiscal year 2024 CapEx outlook. And speaking of that outlook, here's their Q2 2024 guidance. You can see they are guiding revenue into 226 to 236 million, operating margin between 27 and 29%, and a diluted non-GAAP earnings per share of 50 to 58 cents. And like I said, here's their full year CapEx guidance, 140 million. They've already spent 43 million of that, so they have less than 100 million to spread out over the next 3 quarters. On the call, however, both the CEO and the CFO made it a point to caution that their outlook is clouded by geopolitical uncertainty and macroeconomic headwinds. So for that reason, I'm projecting very conservative growth over the next few years. So let's take a look at my projected growth rates right now. So here are those growth rates. And let me start out with what I'm projecting for 2024 revenue, 910 million, a 2% year over year increase. This is slightly below what analysts are projecting for the year. Operating margin, I'm coming in on the low end of that guidance at 27%. Net margin at about 3.37%. And finally, free cash flow at $80 million this year. I'm trying to factor in what their operating cash was from the previous year to where they have that $140 million CapEx spend this year, which is actually a lot higher than previous years. So I'm factoring a pretty low starting point here for our free cash flow. So for the rest of the 10 years, I'm projecting the operating margin to expand up to 29% and their net margin to expand to about 14%, basically flat for the net margin. That gives us revenue growth here over the next 10 years of 6.8% compounded annually, operating income of a 7% compound annual growth, 6.7% for net income, and for free cash flow, I'm actually projecting it to be fairly flat growth at 0.5% over the next 10 years. So that very conservative free cash flow growth that I'm projecting over the next 10 years, I want you to keep that in mind. Their historical 10-year growth rate is at 17% per year. And before we take a look at the final valuation, I want to remind you, free cash flow is what I really focus on when I focus on how much the share price will grow over time. Businesses that generate cash for their owners will appreciate in price. All right, so we're here on my final valuation summary. The discounted cash flow price came in at $48.62, and that's with a discount rate of 8% with a 3% perpetual growth rate. The exit multiple is at $53.29. The comps that I'm using for Photronics are IPG Photonics, Ambarella, Vico Instruments, Camtech Limited, iCore Holdings, and ACM Research. That gives us an average PE for those businesses of 26.25. So considering that average PE there, you can see that right now, Photronics is trading at a 13.2 PE. They are very cheap right now, and their 5-year average and 10-year average is a little bit above that 13.2. Additionally, they've done a great job expanding their margins over the years. Gross margin and operating margin both are way above their 5 and 10-year averages, and they've done a very good job as well of expanding on their ROIC and ROCE, also both above their 5 and 10-year averages. Right now, they're at a $26.88 price in the market, and my valuation average comes into $50.25, which is an 86.96% potential upside here. But because of Photronics' very volatile situation in the market and their small cap status, we have a margin of safety here of 40%, which means right now their acceptable buy price is at $30.15. That means their PE can expand to about 15, which is slightly below their 5-year average, and still be an excellent buy right now. For comparison's sake, I believe last quarter I had them at an acceptable buy price of around $37-ish. They came down quite a bit this quarter. I was a lot more conservative in my growth rates after seeing the results of this quarter. So despite that craziness today and the other day in the market, you can see here these big drops. The year to date, they're actually down 14%. But over the last 3, 5, and 10 years, they've grown very well. 26.3% compounding annual growth rate over the last 3 years, and even their 10-year is above what the S&P has done in the last 10 years. I was disappointed with this last quarter. However, I don't see any issues that fundamentally alter my investment thesis for Photronics. I believe the price fell far enough today to make it a very attractive buy. So before we go, I do want to remind you this is not financial advice, and I do own a very large stake in Photronics. With that, thank you for watching today's video. And what do you think? I love the feedback, so please comment below with your thoughts. Also, please hit that like button. And if you found this info useful, consider subscribing to the channel and joining our community. Thank you and happy investing.